Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good weekend. Good day trading today. Market is up 1.3% on the S&P. It looks like we actually saw here, let's put a Russell 2000 in there. We actually saw Russell 2000. Yes, you can see Russell 2000 was up quite a bit, but notably we did see the biotech seeing about 5.5% today. Russell 2000 led the way. Small caps led the way along with the biotech, 2.6% there. Nasdaq 1.7, S&P about 1.3. Let's go to 65-minute chart. On the S&P and trying to figure out what we can expect going into tomorrow and possibly remainder of this week here. So last night I tweeted this out that we had this. This was basically after the Friday close. I tweeted this out last night. We had a bullish divergence, forming on the 65-minute chart, and you can see that the price made lower lows, while this oscillator making higher low there. The problem was what I was saying is that the problem is because the fact that we failed on this falling midterm moving average. Basically, I was saying that this level is going to be a problem going into tomorrow, which is today. And then, so this happened here this morning. We actually saw a gap up, continue to move higher. We're getting near to that, that moving average, that falling moving average there. And then you can see we're starting to kind of fall back towards this was like fourth hour, right? That was a first hour, second hour, third hour, fourth hour. Not able to advance above that level there. So you can see, and so that was the fourth hour, right? And fifth hour, and then sixth hour looks like there was some volatility throughout, but pretty much because I think there's a lot of optimism in the short term, but at the same time there's a lot of skepticism, right? And so it looks like on the last hour, I remember at one point it was like rallying up, and then we hit that midterm moving average, and we kind of fell back. We end the last hour with the doji basically indecision, right? And again, so we see a gap up with that bullish divergence that I've shown you, and we see a move, and it is no coincidence they decided that they're gonna pull back just right in that on that that falling midterm moving average there. Not a little bit above it, not in the middle of it, just right at it. And because this is a level that has been acting as a resistance here, you can see here it looked like it was gonna kind of look at that midterm moving average as support at one point, and we failed. We failed at where? My short-term moving average is falling down. Look at that upper wick there. We failed. Came down through that hammer. We continued higher, and we found resistance once again. This time we see that short-term moving average and my midterm moving average crossing down, and we threw that shooting star candle this time, right? Basically this candle is opposite of this candle. We gapped down next day through the hammer, some up and down move, actually got below it. We threw that gravestone doji. Gravestone doji does have some bullish connotation. It must be confirmed. Next day we see a shenanigan gap up, right? You saw that gap up. We continue to rally higher, right? And again, at the same level, that midterm moving average. This is why all last week I was saying that I am short-term bearish. I am short-term bearish, despite the fact that we did see some of these rallies. Because once the price got below my midterm moving average here and here, I knew things not gonna be that easy, right? Because we're not surfing up with that moving average as the moving average is rising higher. We're trying to go against the stream here, go against the current actually in the midterm moving average, as the midterm moving average is curling down. and trying to go against that, it's been difficult, at least in the last couple weeks. As you can see, we get up, failed, we get up, failed, we get up. We're semi-failing because obviously we actually gapped up from here. So we're actually back at the halfway. The good news is that the gap remains open. So bulls did protect this gap, and that's a good sign for the buyers. And if you guys been following my work in the last, I don't know, pretty much this entire rally in the last 6 months or so, we've been tracking gaps very, very closely, and that really helped us since the March lows as we were navigating this market to the upside. So now this gap remains open. The problem is we had a gap here before right there. There's a pretty decent sized gap. That gap actually got filled last time. And we are seeing some lower highs here. So what the buyers need to do going into tomorrow, this gap must be sustained. It will be better. It will be the best case scenario if this gap, first let's keep this gap open. I'm going to give you a bearish scenario today also, but I'm going to start with the bullish scenario. So keep this gap open, we thrive higher, preferably breaking above this resistance, fall back, retest this prior resistance as a new support. And at that time, my midterm moving average is going to come like this, like that, right? And it's going to coincide with the prior resistance here as a new support, along with my midterm moving average curling up. There will be some kind of coinciding action going to happen there, and then find support, making higher high. And at that time, we can say, okay, well, price is cultivating higher highs here and higher lows. And my midterm moving average is no longer curling down, but it's curling up. At that moment, I'll label this market bullish in the short to midterm. Right now, as of this day, things can change by tomorrow, but for now, as of this moment, with the data that is at hand, I still have to give benefit of the doubt to the sellers in the short term because of this resistance. But it kind of slightly improved on the midterm. Slightly improved because of this gap up, and because this gap still remains open as of today, as of now. Things can change by tomorrow night. So if you guys been following my daily videos in the last few weeks or so, I've been saying I am neutral to slightly bearish in the midterm. So short-term bearish, midterm neutral to bearish, long-term bullish. You guys remember that? And that's been the same. I haven't changed that. That's been the same pretty much throughout last couple of weeks or so after this decline. I think I'm going to switch it just a little bit to midterm neutral. So it's improved. So short-term bearish, midterm neutral. Not neutral to bearish, but neutral as of today. And I think the biggest reason is that I made it kind of improve a little bit today is for the fact that we have bullish divergence here. I put on another indicator here so we can gauge that bullish divergence. And we just crossed, not only that, we actually gone above, we are breaking above this prior resistance here on my oscillator. Not getting, a lot of times what's going to happen is it gets failed here and then pulls back down. And price actually did that. So that's kind of interesting also. This is why it's kind of nice to have both indicators here. So you can see price actually pulled back. However, the oscillator that we've been tracking almost every single day here last several months, this has never pulled back. It's continued to higher, breaking above it. So that tells us that there's some momentum that has built with the recent move here. So right now we got some bullish signals on my indicators here, right? These two indicators, while the price tells us that we are seeing resistance on that moving average. However, the gap from today, it's open. So if we can get above this moving average, if we can able to sustain the move to the upside, breaking above this resistance and start to make and start cultivating higher lows and higher highs above this long midterm moving average, and this, if we start to see this midterm moving average start rising back up, that's when we can say we're back to bullish sentiment in the short to midterm. So that will be a bullish signal. So as of now, as of this moment, there's some short-term bullish signals building. So only thing I think we have to kind of be careful about, it's some shenanigans now. So that we have to factor that in. What I mean is, we have all these signals, yes, and the gap, yes, just because we had a great move since the March lows. I believe 65% move on the S&P, like 70, 75 on the NASDAQ, and we've been pulling back from that point after a great rally that we saw since the March lows. There may be some shenanigan sell-off or something. We have to also keep that up. We also have to keep that in mind and put that into our psychological analysis. So if we see a gap down out of nowhere, that will be just a shenanigan gap down. That will be bad. Very, very bad. Because now we have this resistance here. If this thing gaps down, this will turn into an island top. And all these signals might fail. If it does, and I've seen it happen before, it will be a kind of a fake out failure. And a lot of times when you see a fake out failure, that seller can be pretty deadly in the short term. So here's I'm gonna make my final comment before I let you guys go on this video. We do see some bullish signal happening, technically speaking, right? The gap area, some of these oscillators are breaking out. We got bullish divergence still playing out, right? We're holding above the gap area here. Oscillator, screaming bullish here. One factor is some kind of a shenanigan. Like we gap up tomorrow morning and see this thing just puke out of nowhere. Like seeing some kind of a big, long, dark, bearish, red, bloody candle out of nowhere in the first, second hour. That kind of stuff happens when the market is extended. When you look at that daily chart, which we talked about on last night's video, right? Or the weekend video. When you're dealing with an extended market, these kind of stuff, the odds of these kind of stuff kind of increases, right? These kind of shenanigans happens usually at the early stage, like March lows. Remember, there's like a lot of crazy shenanigans happening in March lows and like early April and stuff like that. So like at early stage, you're gonna see shenanigans, and then the market get into a good bullish uptrend, and then at the later stage, shenanigan comes back. So I also want to keep that in mind and let you guys know that that's a possibility. Come back tomorrow. You can follow me at 2K. I've been tweeting things out today. If I see any kind of shenanigans or if I see any kind of gap downs or something, I will tweet things out, let you guys know ahead of time before we get into these nighttime market update videos. So enjoy your evening. Good luck trading tomorrow.